if you had asked me, Anthony, like what's the investment that you do not want to make, I would never in a million years buy a 30-year bond that yielded 2% interest. Never, ever. And yet that was a winner this year. If you bought a 30-year bond at 2% interest, when the interest rates go to 1.2, you've actually got a massive spike. So equity spiked, big tech spiked, bonds spiked, and and we looked at our cash, and I had to listen to a litany of talking heads, Ray Dalio on down. If Ray Dalio didn't say cash is trash, every podcaster that trolled Ray Dalio said Ray Dalio says cash is trash. Cash is trash. And then I went to school at some point on you. This is after I realized I had a problem, and I listened to you describe the plight of the working man. I go to work, I get paid okay, this is not a working man, this is a working lawyer. I get paid $500,000 a year. I save $50,000. I put it in my piggy bank. I have $500,000 in cash in the bank. I have kids and I have a future. And then all of a sudden I realized that the cost of a college education is going up at 8% a year, and my cash is yielding 0. Now, at that point, we've got the Pomp podcast telling me I'm crazy to work for dollars and save my cash. And if you take the $500,000 and the plight of the lawyer with the 2 kids who I send them to Harvard and the $500,000 of cash in the bank yielding 0, and now you multiply everything by 1,000, that's me. I have $500 million company. We're making $50 million a year. I got thousands of people working as hard as they can possibly work. We're sacrificing right and left. We're squiring our pennies away. We're putting it into the bank account. There it is. And, in 2019 and before, we worried about the unknowable, and we thought maybe we'll use it for something. And by the way, I'm a bit older than you. I remember when you got 5% interest overnight on your money. And it wasn't that long ago that the risk-free interest rate was 5% before the great financial crisis. And I'm like, well, I'm going to make $25, $30 million a year on this. And I kept hoping and waiting for those good times to come back. I was the guy that when the interest rates, when the 30-year T-bill interest rates started to go to 3.5%, I'm like, finally, they're going to go to 4, and then they're going to go to 5, and they're going to go back to normal, right? Normal interest rates. And then, of course, hope was dashed. It went the other way. And what happens next? Well, asset inflation goes through the roof, right? And, this entire conversation of inflation, it's really twisted because everybody talks about consumer prices, CPI, inflation. We're not getting enough inflation. We're not getting enough inflation. Okay? Well, you're not getting inflation on YouTube and Netflix streaming videos and candy bars manufactured by robots in factories and Domino's Pizza. You're getting inflation on everything you want. If you wanted an Ivy League education, if you wanted a beachfront house in Miami, if you wanted the apartment in New York, if you wanted anything scarce, everything you want is going up 7%. And that's asset inflation. By the way, if I want a bond that's going to yield $50,000 a year, it used to cost $1 million, and this year it cost $10 million. The cost of the asset went up by 2%. No, I have a house in Miami Beach. It was a nice house built in the 1930s, and I have the deed of sale for the house. $100,000 for that house in 1930. It's gone up in price by a factor of 100. It's like, so no inflation, kind of inflation, but it's different. It's asset inflation. So I didn't really think about it until I got slugged in the face with the 2x4, which kind of happened around March or April when Main Street shut down, the economy shut down, and bonds went through the roof. When municipal bonds went up while every city is bankrupt, when Apple stock and every other public tech equity went up, and the multiples blew out, and the economy went to the worst place I've seen in 30 years, at that point you start having a thought with yourself, which is, what is the true inflation rate? And we should probably coin a different term, right? If you looked at asset inflation on a good year for the last decade, it's 7% a year, normal, right? This year, you can make an argument it was 25%. Right? I mean, if you look at the long bond index and if you look at these equities, you can make an argument that the asset inflation rate leaped to between 25 and 30%, depending. And now, what does that mean to me metaphorically? Well, here's how I feel. I felt like I had $500 million of cash in the bank, safe, and it was yielding 2-3%, and I'm ready for a rainy day, and then I'm starting to do stuff with it. And then every month, some banker sends me a note saying the interest went down. It went down. Now there is no interest. And then someone took my cash out of the bank and they put it in the backyard in pallets. And then they opened my back gate. And then every month, someone comes along and starts burning 2% of the money. And then I started thinking, well, in 12 months, 25% of the money is going to be gone. And then, then I started thinking, what is the point of all this? What am I doing wrong? And of course, the answer is you can't hold cash. And so what do you do with it, right? Well, I mean, the answer is,
so hold on a second here. So you realize the macro issues. I think there was a couple of different things that happened, right? So the macro issues happened. You're sitting there. You're in a very unique situation because you have so much cash on the company's balance sheet. You run a business that throws off a lot of cash, right? So you kind of have that advantage. It actually improves economically, like you described, in terms of your costs are going down. The structure of your contracts kind of are weathering very well through the storm. And so you remain in a strong business position where you have cash. And actually the cash is growing, not through investment, it's growing from kind of your income. And you begin to get worried about that. How do you get to crypto, right? And I'm leading you a little bit in terms of you've got a friend who basically kind of hit you over the head a second time. So let me tell that story as to kind of what pushes you to at least go explore crypto. And then we can talk about kind of what you do. But just talk through that process of like how you actually arrive at, okay, crypto is a potential solution.
When times are good, everybody's busy. If you're in love with the iPhone, then the answer to everything is iPhone. If you're in love with your Apple Watch, when you're in love with Twitter, the answer is, that. So when times are good, everybody focuses on that, and there's only limited time. So I think I was closed to the possibility. It's just there's so many other things going on. And when the COVID crisis hit, everybody got sent home, and we all had to contemplate ideas that we had previously rejected, and we had to embrace ideas that just were very foreign to us. So how do I discover crypto? Well, first I have a mega problem. And the mega problem is I have a lot of cash and I'm watching it melt away. And I'm helped to realize I have a mega problem by this insane V recovery in the bond market and the equity market and all of the talking heads. So after that, then I have an opportunity, which is I've got a cash generating business. And then I've got one more problem, which is the investors, the outside investment community. If you go to them and say, hey, we're a great enterprise software company and we've got all this cash, their answer is, well, we don't really value the cash. Well, because they're smarter than I am, right? Now, I'm not joking, I'm being serious. They are smarter than I am. They knew before I knew that cash is trash and you're a fool to sit on the cash. If the natural asset inflation rate is 10%, it means that every time I generate $50 million in operating income, I burn $50 million in purchasing power on the cash. And we're just running as hard as we can to stand still. So we weren't getting any credit for the cash. we didn't need the cash. Ergo, we need to do something. And so what is the thing you're going to do? And we started working through it. Like, what do you do if you have $500 million of cash you don't need? Well, you can buy your own stock back. And then all of a sudden, you contemplate other things. So, I mean, you're an expert. You tell me, if you had $500 million of cash right now, where would you invest it?
I'm cheating because you and I see eye to eye now, is I'd go buy a lot of Bitcoin.
Hey, you, did you like this video? Great. Make sure you subscribe, like the video, and see you next time.